The latest U.S. inflation report, released by the Bureau of Labor Statistics on October 24, 2025, showed that consumer prices rose modestly but remained above the Federal Reserve's 2% target. Inflation ticked slightly higher in September, continuing a pattern of persistent price pressures amid elevated energy and goods costs. Key figures. The Consumer Price Index, CPI, rose 0.3% in September on a seasonally adjusted basis, following a 0.4% increase in August. On a year-over-year basis, inflation stood at 3%, up from 2.9% in August and marking the highest reading since January 2025. Core CPI, which excludes food and energy, increased 0.2% monthly and 3% annually, slightly cooler than expectations for 0.3% and 3.1%. Category breakdown. Energy, the biggest driver of the September increase, with gasoline prices up 4.1% and the overall energy index rising 1.5%. Food, up 0.2% for the month. The Food at Home Index rose 0.3%, while the Food Out of Home Index rose 0.1%. Shelter and services. Shelter continued to contribute significantly, along with increases in airline fares, recreation, household furnishings, and apparel. Prices fell in categories like motor vehicle insurance, used cars and trucks, and communication. Broader context. The CPI release was delayed by the ongoing government shutdown, but the data was processed to satisfy legal requirements for 2026 Social Security cost of living adjustments. Economists noted that tariff-related price pressures likely contributed to goods inflation, though core services inflation appeared to cool slightly from August. Market and policy impact. While September's inflation data underscores continued upward price momentum, analysts suggest it won't prevent the Federal Reserve from cutting interest rates again next week, as it balances moderating growth with higher consumer costs. Markets largely view the 3% reading as manageable and aligned with forecasts.